This episode, the Daily Trade the Chain show, not to be confused with the Trading Floor Trade the Chain show, which Nick does every midday, Monday through Friday, that you need to watch. It's the best 15 minutes that you can digest for sure if you're active in the markets. I'm joined alongside Doug, the everyday guy DeRosa, who I don't know why I have audio problems all the time, and our director of research, Nick Mancini. Um, Today is Tuesday, so any Trade the Chain members, just a reminder, tomorrow is the member AMA at 5 o'clock p.m. Eastern Time. We'll be doing that. And then, of course, Thursday, the Twitter Spaces. And if you missed our Twitter Spaces last week, it was a good one. We had John Nigerian on from CNBC, Market Rebellion, Grant Cardone, with Jordan Freed, the founder and chairman, CEO of NFT.com. So excited to see
Mark
what this week.
Lopresti as well.
Oh, Mark, can't forget Mark Lopresti because he'll send me nasty gram texts. The Nick, we reclaim the 1 trillion mark at some point today.
Yeah, we're hovering around 1 trillion.
Yeah, we'll take it to the macro. We'll show everybody real quick before we dive into the trades, as well as you guys saw the thumbnail. There was a lovely girl on there who has recently been fined by the regulators, and we'll get to that, as well as cover Credit Suisse, and then some new Alex Mashinsky revelations that have come out on Twitter today. We'll hit those up as well. So anyway, let's get to it, folks. Here we go. We have the macro sitting total market cap just under 1 trillion, 960 billion, which is stronger than it's been for quite some time. Bitcoin trading right above 20,000. And Nick's going to go into what those thresholds are if it keeps going up for him. Daily sentiment, very bullish. 84 over 100. So if you're playing those perpetual longs or shorts, pay attention to that sentiment. And then Ethereum 1349, which is a little on the bearish neutral side. If you got our Twitter post this morning, which we do every morning, the hottest on Twitter, Kava, up 379% in social media, up 2.3% in price. And then going down to the most bullish coins, we have XHV up 13.69%. Bitcoin on the scale at 84. This is the most bullish I've seen Bitcoin in a long time, guys. So I'm a little excited about that. Near with a score of 80, up 2%. And then heading over to the bearish coins, we have ZEC with a 25, Theta with a 28. But even the bearish coins are showing 24-hour percentage gains in the positive. So happy about that. You look at the top price gainers. You got ZLW up 87% in the last 24 hours. So Nick was commenting on some Binance Smart Chain coins being rather positive outlook on the social side. So we'll see what he has to say. Going over to the macro, we got the 1 hour, everything trending upwards into the green. So looking fairly good on that. Excited to see some of the look XRP. I mean, this lawsuit is really going to be the judgment day on price action for XRP. And you can't stand in the way of the XRP army, up 45.4% in the last 30 days. So, Nick, let's hop on over to your screen. What do you got for us, bud?
Yes, sir. So let's look immediately at equities because I think that's really where the market is riding on. We had, when I went on CoinDesk TV, we were, right around here, touching the lows. We had a big jump from the lows and have climbed a lot higher. I honestly didn't expect this much strength, but I'm not going to complain one bit about it because it feels good to get back into longs again, confident longs rather than shorts. So we have the makings of what appears to be a bear market rally. We're definitely overextended. RSI on the hourly touched 80. Typically, that is a local top signal, but I'm not ready to call one yet due to the wicking action that we saw in the most recent hourly. I would say our next target, if we can make it there, is 38.30 and then 38 37.70. And if we fall back down, 37.40 and 37.30 would be natural targets for, where you would expect a bounce. We're hearing a lot of, bounces are for buying right now. I don't subscribe to trying to be too forward looking and trying to buck momentum, but it does seem like, dips, a dip right now, it would be worthy for buying, but we'll have to check and see how momentum looks. Yesterday I said we would probably drop back down before heading higher. That was completely bucked. So, don't get mad at me if we don't end up heading lower before higher, but it would definitely make more sense being overextended where we're at now. So I would look to, if you're not long now, I would look to re-enter a little bit lower if the S&P can crab lower as well. So comparing that to Bitcoin, last time we had a similar move, we ended up barting. We're hovering around the trend, the daily trend that we've been on since November. Quite fascinating to see us at this price level, considering this literally is the market top trend. So if we can break through it, there's a really good bullish narrative here to say if we can break the trend, then we'll continue moving higher. I would say 20.5 first and then 21.2 second. I'm not going to get into why, because it dates back to previous levels that we traded in, but those seem very sensible. If we drop back down first, if the S&P drops, we'll probably follow. I would expect a reload around 19.7, and then we would probably try and continue higher. Maybe we get stopped out here again, have a little bit of a higher low, and then move higher as well. So it does look like we're set up to break the trend, but it's your longs get a lot more risky here. But as Alex mentioned, Bitcoin daily sentiment very much off the charts, has been steadily in the 80s for nearly the full day so far, nearly 24 hours straight. So very positive sign if you are long or looking to get long. And then a bit of a difference for Ethereum is just the current price level that it's held up at. Bitcoin looks a little bit better because it broke above the previous range that it was trading in. Around late September 29th to 30th. So lower target for Ethereum would be 1330. Higher target for Ethereum would be 1380. Obviously, we're very much likely to follow wherever the S&P 500 goes. And this does look like it might, head back down to recent territory before making a decision on moving higher. So that's how the charts look right now. You're on mute, Alex.
What's going on with some of the things that we were discussing over the weekend that were growing quite concerning as far as the market is concerned on the TradFi side? I'm not sure. At this point, unless you've been under a rock, I'm sure you're hearing the rumors start to buzz. But it's starting to get really familiar, like 2008. What's going on there, Nick? What are we looking out for?
Yeah, so if you want to share my screen again, this will give some context. I've got the daily chart. Actually, I'll switch to 3-day because it'll give us a little bit better of a look. This is the S&P 500 futures chart. I've talked about these levels multiple times in the Trading for Daily show. So if you're missing that, then you're missing a lot of very acute market analysis. 3550 was the top of the range that we traded in late 2020. 3225 to 3300 is where we traded at the low end of that. So it makes sense to see a bounce here. And what drove us lower was obviously the Fed threatening to continue to clamp down, higher interest rates or higher federal funds rates. And then we have the Credit Suisse issue, which is dampening a positive macro outlook. So freight costs are down, energy costs are lower. So there's excess supply in companies right now. You'll see Amazon is doing another Prime Day. That's because they have too much inventory. They need to get rid of inventory and spur demand. So everything was kind of going in the right direction. And then we had Credit Suisse happen. But the thing with Credit Suisse is that from the outside looking in, at least the information that we're being given says that Credit Suisse is in a very bad place, but it doesn't mean that they're going to completely collapse and go under. They have basically until the 27th of August to figure out some restructuring things. And I think you're going to see the market unless we get any bad news in relation to Credit Suisse before the 27th, you'll probably see the market get relief, because we don't have a federal, or we don't have a FOMC meeting. Some of the energy issues are starting to be abated more or less, or become fully priced in due to the knowledge around them. And then we don't have as much of a supply issue. We just saw unemployment rise, for a pretty good pinch. I think it was like 5 to 10%, which is a huge jump compared to the numbers we've been looking at. And then we're seeing housing come off as well. So basically all the things that the Fed has been wanting to do in relation to, quote unquote, solving the macroeconomic issues seem to be either priced in or fully understood by the market, which is more or less, the market pricing in it. So given the fact that we were at, a multi-year support, and a lot of the issues are not solved, but either clear or understood, we're very in a good area for a bounce. And you've got, as long as this closes the way it is, you've got bullish divergence too on the 3-day chart, which is pretty powerful for equities. So if things go well, then equities should at least gradually slide up to probably the 3,900 level, which would be both resistance of where it traded in late August, early September, as well as, supports of where it traded in late August, early September, as well as resistance of where it traded at in June and July. So I think that would probably be a good first target that will hit, likely into mid to late October. And then of course we have the 27th to worry about, which is Credit Suisse, kind of their doomsday or lack thereof. And then we also have earnings later this month as well. So we have huge consumer discretionary and tech earnings, which will also give the market a signal of how it should react going into Q4. So I think we're set up for a positive October as we see it now, but it doesn't mean that those issues that I mentioned could not reverse, or something could pop up that could cause further turmoil.
Yeah, those Credit Suisse default swap spreads were getting close to 08 levels. So
I think it broke those levels either this morning or yesterday. I don't know if it's like firmly broken, but I know it broke above briefly yesterday or today.
Doug is seething inside. The everyday guy is seething. I can see it. He's like, I can't do this every 10 years. Is this what we're going to have? A recession every 10 years?
I was just going to say that my concern, which our colleague out of London has expressed, was that, when everybody was making money in crypto over the last year or two, like, you don't really know about the roaches until you turn on the lights, and then you see the roaches like Luna and Celsius and Voyager and whatnot. And so everything was fine when the market was great. And now we're, hearing about pension funds in Europe, that, especially in England, that were using leverage to get to their benchmarks, which, if anybody doesn't know what that means, like a pension fund, which is fire, police, education, government, they try to get a consistent return on their money annually of 7%, which you would think that's not really all that difficult to get to, given what the markets have done over like the last 10 years. And some of these pension funds, were using leverage to get to that. So obviously with this rate move that was just so strong against them, a lot of these people were on the wrong side of that. And that's why the Bank of England had to go from QT to QE. So when you think about that, are we doing the same thing in the States? It's very, again, disconcerting to know when you turn the lights on how much bad stuff is out there. And it does reek of 2008 again, right? The buzzword then was deleveraging, right? We had too much leverage in the system, and have we learned nothing? And that was the whole corollary to create cryptocurrency, right? It was supposed to be something different, and doesn't seem like we learned anything 13 years later.
Also, in relation to what Doug just mentioned, one thing that I forgot to mention was that the UN yesterday called on central banks around the globe, specifically the US, to reverse on tightening, or on basically reverse on quantitative tightening. And I don't remember exactly what their specific verbiage was, but it was the UN. So of all organizations, which the US sits in. So the market is definitely getting a bit euphoric around that narrative as well. I don't think it's going to happen, but they're definitely piecing that into the puzzle.
Yeah, I don't think that's going to happen. And particularly if the U.S. doesn't want to happen, they pay the biggest dues into the UN, and that's just another extension of manipulation sometimes, I think. But it was surprising to hear.
I would say,
I think in the positive to that, even if the U.S. doesn't do it, is that other central banks may follow in some sort of domino effect, and then eventually the US will do it a little bit earlier than expected, which would push up the timeline of the bull market, which would then still continue to give euphoria to crypto. So, or to risk, I should say. So something to consider is just listening ground to the ear for that narrative, because if more central banks follow, you'll continue to see bullishness despite the US potentially bucking that narrative.
I would just add too, Alejandro, that you've worked with a lot of those firms out there like Credit Suisse and Goldman and whatnot from the hedge fund side. It's kind of like, this is going to be a bad analogy, but it's kind of like the goofy kid at lunch in high school, which maybe it was me, that nobody wants to sit with him because he's by himself and he dresses funny or whatever. And as that develops, right, then counterparties, when there is bad news or perceived bad news, they don't want to deal with that firm. And that situation gets worse, right? It almost is self-fulfilling. So maybe there are roaches there or there aren't, but people now perceive there's roaches, and then their spreads do even blow out even further, right? And then they have, attrition through employees, right? Their best wealth managers are going to be like, well, I don't want to stay here because my retirement's going to blow up. Let me get out of here. This is a sinking ship while I can, right? So it does kind of snowball in a bad way, and this can unravel quite quickly. So.
Did you have a roach problem over the weekend?
I didn't, but maybe I was the kid in high school, sat by himself. I don't know.
All right. Moving on, folks. Tell me who this is. Does anybody recognize this person?
Selma Hayek.
Oh, Jesus. No. This is Kim Kardashian, internationally known Kim Kardashian, and we all found out yesterday in a release, not only just a release, a video by Gary Gensler, that the S.E.C. charged her in a civil suit, and she has agreed to pay a $1.26 million fine to the Securities and Exchange Commission for not disclosing how much she advertised for in a post. So I find it interesting because this raises the question of, listen, is the S.E.C. now treading in the FTC's backyard? Who knows? But I find this reading through it, I didn't quite get where it adds up, and I'm not a big fan of the S.E.C. They operate their budget strictly out of fines, so it's a very conflicted interest when they do fine people. But a guy I happen to know, as well as Dougie, Drew Hinks. He's a attorney out of Florida, and he had an interesting post on it. While explaining that it is notable that Kim Kardashian settled with the S.E.C., the consent order was even more interesting, and not a lot of people are going to open it up and whatnot. But basically, things like she said she was doing an ad. She said not financial advice, as this article states right here, but it's also his big thing was they're fining her for shilling a security, but they didn't find the crypto project itself deemed to be a security. Like they never went after the crypto project, right? So
yeah, they had a beef that she didn't disclose she was getting paid. So, which begs the question, if she did disclose she was getting paid and it was a crappy token, I think they said it went up 600% and dumped, would they have been fine with that?
Well, that's the whole thing that doesn't make sense with me, right? So it's basically like, listen, we're fining you for not saying how much you got paid to put up an advertisement post on social media. I really didn't even know that was under the S.E.C. purview as much as it would be under another 3-digit agency. Okay, because it didn't have anything to do with security, more or less. But the big mea culpa was the fact that they didn't go after Ethereum Max, which is the project in question, and sue them and get a judgment from them saying they were a security. So in the end, was she even really shilling a security?
Well, I'm curious if you're in her position, do you just get 250,000 or do you get a boatload of tokens?
No, she got 250,000. No, the Kardashians only take money.
Okay. But
Yeah.
I
I
guess.
would think you would have taken a boatload because with that appreciation, but no one is coming out and saying that she got any.
Well, she probably got 250 aloe, but whatever that ended up being, who knows? But I guess Alex, my counterpoint, and just not that I'm on the side of anything, but I guess just maybe this is how the SEC is operating, is like, we'll fine you based on this being a security, and it's up to you to prove that it's not a security, which is a multi-million-dollar legal battle in itself. So maybe the lawyers were just, you know what, let's just take the hit and walk away. Because I guess if you're being charged for something that's a security and your defense is, well, it's not a security, then you basically got to go at bat for that company itself, right? I mean, I'm not a lawyer, nor am I a legal expert, but I'm just trying to think like logically how the SEC would pigeonhole somebody into taking a $1.3 million hit on something that they only got $250,000 for. Am I crazy? I don't know.
I don't know. I mean, this is the whole problem all along, is that what is your exposure? Well, nobody knows what their exact exposure is because there's been no guardrails that have been concrete drawn on the ground for 95% of the industry. So your exposure is whatever they want when they wake up, on the wrong side of the bed. That being said, I feel going through the consent order, she could have fought this and won, but then why didn't she, people say? Because Kim Kardashian is a brand and she doesn't want to go through the next year and a half at the cost of $1.5 million fighting the S.E.C, because even if she won, she would sully her name. It would be headlines for a year and a half. So what's the easiest thing to do when you have a couple $100 million? You pay out $1.26 million. You don't admit or deny guilt, which is what she did, and you take the cherry on top, which they slapped her hand and said, "Hey, listen, no more crypto ads for you for 3 years." Boom, done. Let's go make another reality show. It just sets a bad precedent. It's regulation via enforcement.
She does have a law degree. I mean, it'd be a hell of a reality show. Is Kim K taking the lead on suing the SEC? I know that would get a lot of views.
I don't want to go down that road. I'm going to the next news site thing. All right, so this is interesting. There's a gentleman. There's a gentleman by the name of Pete No Stop on Twitter. Actually, let's dig in Pete No Stop real quick. Here we go. Pete No Stop, 1,900 followers, crypto YouTuber, make it all back. Good for him. But this is some big news. And he goes, I met up today in real life with an ex-Celsius employee. He says Alex actually withdrew up to $124 million from Celsius, and Chrissy, his wife, $3 million. Now, I can't pronounce the first name of Mr. Daniel here, Daniel Leon, but S. Daniel Leon, who is a partner in Celsius, withdrew $40 million. All this shortly before the freeze on assets. And we learned last week that Mashinsky withdrew another $10 million shortly before the lockup on the premise that he had to pay taxes, and that's why he did it. So this is really interesting news, and I feel really sorry for the Celsius people, because if this is true, then I don't know where your mind is. I mean, is there a definition of how much money you're allowed to withdraw yourself, or how much crosses the line into ridiculousness? Right? I mean, if you're an entrepreneur and you have a successful business, you're entitled to certain stuff, but not at the penalty of your customers or users. So, I mean, Doug, do you think 124 million plus an additional 10 million, if it is true? And by the way, this guy Daniel Leon, who took the 40 million, one of the co-founders of Celsius, apparently has just tendered his resignation. So we all know Mashinsky did that last week.
I mean, it really shows you can unbank yourself pretty well. Why is this taking though so long? Why is the Celsius situation taking so long? Like this is
because they tied it up. They tied it up in an exclusivity period, and unlike Voyager, where it was just a really profoundly dumb decision in risk management, this appears to be heading down the direction of fraud. So I'm not really sure, and I don't want to say that's an allegation, allegedly, but I think that's where the complexities come in.
Well, my other question too is, who is the new CEO? I know Mashinsky stepped down, but did they name somebody? And is that person even addressed, clients, investors? I haven't seen any dialogue from that new person.
No, so there's this back and forth war between dialogue with Voyager and Celsius. People like the fact that Celsius UCC committee actually tweets a lot and does updates. The new CEO or whoever the acting CEO hasn't said anything, whereas the Voyager people, they're upset the UCC never tweets any updates, but it's going in a much more orderly process. So. You win, you lose. I don't know which way to go. I just think if Alex Mashinsky did take 134 million, which is alleged, the 124 plus 10, out of the company in sell tokens while shilling sell tokens, that's a very unfortunate chain of events for depositors and customers who he earned their trust with. So that's that. All right, guys. What do we got? What do we got to look forward to for the week?
It's Yom Kippur tonight, by the way.
Oh, it is.
Yeah, for our Jewish audience.
For Jewish, this is a very Italian
panel. Yeah,
panel up here. Yeah.
I've been to a few Passover dinners. Fun, very fun.
Are they tasty?
Yeah, no, Passover dinner is lit. It's very, it's probably the closest to like an Italian. It's very like Italian dinner style. Like everybody's very friendly. It's all open, very family style meal. Definitely some, some praying and traditional stuff thrown in, but super fun.
When in London, I go to Crypto Shabbat at a crypto buddy's house. He has like 20 people over, for the Friday night ritual. It's always good. It's even the kosher wine. We know I like my wine, but the kosher wine, it's pretty tasty. I had matzo ball soup last night for dinner too.
Well, there you go. This is the holiest day of the year, though.
Is it really? Well, yeah. Thanks for reminding us. So,
well, there you go. I'm more than just an Italian everyday guy.
There's nothing really crazy on market. So I did misquote earlier. It was not the unemployment rate itself that grew. It was job openings decreased. So I had that flipped. It doesn't exactly imply that the unemployment rate rose, but job numbers dropped from 11 million to 10 million, which is good, or job openings, I should say, which is a contraction of job openings, which is in line with what the Fed wants. So unemployment is released Friday morning. The unemployment rate will come out. It's expected to be 3.7%. So if the unemployment rate is higher than 3.7%, that is good because the Fed wants the unemployment rate higher. If the unemployment rate is lower than 3.7%, that is bad, as the Fed, again, wants it higher. So, the bad news is good news is still in effect.
Okay. All right. Good. Hey, a quick question. Anybody observing the airlines? And I want to hear comments from the crowd too. I feel like, so what's happened in the schedule on my regular routes that I do is the airlines have now taken flights off the schedule. So if there was like 5 flights a day, there's now 2 flights a day. Okay. And then I was supposed to speak at this conference, this FinTech conference in Barbados this week. Actually, a really good one, Prime Minister and their head of their stock exchange. And I literally am not, because the flights that I usually take to Barbados have all been taken off the board, and you have to go through Montreal, Panama, or London. You can't go from Miami or New York anymore. So what's the situation? And before anybody answers, my theory is that they got so much flack over the last 5 months for cancellations and delays that they just gave the middle finger to the federal government and the FAA and said, you know something, we'll make the statistic better. We just won't have those routes anymore.
So they were talking about this on CNBC recently. So due to the expected recessionary conditions, they're expecting a decrease in overall travel, specifically business travel. And I find it odd that Caribbean flights are being cut, as we head into Q4, which is when typically most people would take a Caribbean vacation. But from what I'm hearing, all airlines across the board have been decreasing flights in expectation of recessionary conditions coming up, and they basically don't want to get caught. They'd rather have too little supply and increased demand to then add things on than have too much supply and have demand not met. I think that's kind of what they're looking for. And it sucks because they're literally the best positioned companies on earth. They just buy back their stock way more than anybody else.
Oh yeah,
but the airline companies they have very slim margins, but they make absolute bank because of their credit card rewards programs, which bring in way more than the revenue from their actual flights and services. They're extremely well capitalized. Don't let the whole 2020 thing fool you. They just didn't have enough cash on hand because they spent 3 years buying back stock.
Thing is, they had more flights in during COVID than they do now, and they were half the price.
Well, the pilot shortage is, that's
pilot shortage is also another thing that's because most of the pilots that were currently in the force were ex-military, mostly late 80s, 90s, early 2000s. And now you have to most people are, and the military is basically training drone pilots for the most part right now. And you cannot be a pilot unless you have actual air hours. So training a pilot takes a lot of time. I actually know a guy who I used to trade with back in 2017 who became a pilot. He went from literally 2018 to now. The guy's just now flying commercial flights and the shitty ones. So, I mean, it's taken a guy 3 years to become a pilot. Well, a commercial pilot, which is crazy.
I don't think it's necessarily crazy. It depends on his flying experience, But
it's good. We want
I don't
pilots,
want the
but
guy who just graduated flying me. I'm gonna be honest with you, okay?
But that's what's gonna happen though, is because we've got a bunch of old retiring pilots, and then it's gonna be a bunch of young guys without a whole lot of wings on.
Well, they do have that mandatory. I believe it's is it 55 is a mandatory age, or 58?
I think it's 65, isn't it?
Did they raise it? Okay. I remember it was crazy young. Buddy of mine's dad flew TWA from JFK to Barcelona and had to retire, and he still looked young. But the thing is that in the old days, well, when like we were growing up, Doug, the pilots used to be like ex-Vietnam fighter jets pilots, right? They get out of the Navy, they just flew their butts off shooting down, MiGs and all this stuff, and then they were flying, for all the aircraft companies, and you felt good about that. You're like, hey, if this guy can maneuver at Mach 1 around Southeast Asia, I trust him to get me to Lisbon, Portugal. Nowadays, you don't have much of that going on. You have people who are literally greenfielding it through flight school, gaining their experience and stuff. And there's nothing wrong with that. But if you guys have flown United in the last year, you'll see they run ads. They actually opened up the first airline flight school. And so there's United Flight School, and anybody can join and try to make it, get their pilot's license and go through the ranks. So anyway, listen, just as long as I don't fall out of the sky, I'm pretty happy.
I mean, it's not a bad gig. You make bank. I mean, you have to fly weird hours, obviously, but you make bank. And I mean, the plane pretty much flies itself these days. So you don't really do, you only do a little bit on landing and takeoff, as I understand. So, I mean, it's a pretty freaking chill job.
Nick's now equating himself as a skilled airline pilot, right? That doesn't do much. It's like
let's get him a simulator for the next show. See how he does.
They don't. Everything is automated. I mean, they literally. I really don't think they have to do much unless there's like extreme weather conditions, as far as I understand. But I definitely agree with Alex that I want a guy or girl who has some experience, because you hit those turbulent parts, and whether you're in first or coach, you don't give a shit, because you're in the same result as everybody else. So
I hope we have no pilots watching. But I do one last note on the whole airline industry thing and flying in general. I was discussing this with a friend of mine the other day. When you know how sometimes you land and the people in the airplane clap? Who's experienced that? Everybody, I think.
I've actually never experienced that in person, and I'm
What
very
do
glad.
what do you just stay in your bedroom all day?
I've never been on a plane where people clap.
So 98% of people have experienced landing and the whole plane clapping, right? And my pushback on that is I just want to turn around and be like, guys, did you not expect us to land? Was there something in your mind which you thought we were not going to land and now you're cheering because we did? Because that's just bad mental state if you're going to start flying. If you clap at the end, I don't get it. We were all meant to land.
Stupid. It's like clapping when a roller coaster ends.
Yeah, exactly. So, folks, thank you for sticking through the banter. Really appreciate it. Again, tomorrow, Trade the Chain members AMA at 5:00 Eastern time, and our Twitter Spaces on Thursday at 4:30. We will see you tomorrow. Thank you very much for watching, folks.